Welcome to Globe Lines, where we map out the biggest financial and geopolitical moves shaping our world. For decades, U.S. Treasuries have been the bedrock of global finance, a cornerstone of America's economic might. But now, that foundation is starting to crack. Countries like Japan, Saudi Arabia, and even the UK are offloading U.S. bonds at a worrying rate. With rising interest rates, shifting alliances, and mounting geopolitical tensions, this sell-off is gaining momentum. Washington is scrambling to keep faith in the dollar, raising a big question. Are we witnessing the beginning of the end for its global dominance? Let's take a closer look at the key factors putting America's financial dominance at risk.
Traders may want to put on their hard hats. That's because US markets picked up where Japan left off, and the global stock market.
An hour and a half ago, the US went ahead with its promise of 10% tariffs on all Chinese goods headed to the US.
Japan's financial pivot, from buying US bonds to selling. Japan has long been one of the biggest backers of US Treasuries, quietly propping up America's financial stability for years. But now, Tokyo is offloading US bonds at a pace we haven't seen in decades. Traditionally, Japan snapped up treasuries to keep the yen steady and shield its economy from external shocks. But that playbook is changing fast. In March 2024, the Bank of Japan, BOJ, raised interest rates for the first time in 17 years, finally ending its negative rate policy. By early 2025, the BOJ is treading carefully on further hikes, wary of slowing economic growth. With higher yields at home, Japan has less reason to keep piling into U.S. debt. On top of that, Tokyo's ramped-up defense spending and economic revitalization plans under Prime Minister Shigeru Ishiba mean the country needs more cash on hand. But there's more to this than just economics. Japan's unease with U.S. foreign policy in the Asia-Pacific, especially Washington's hardline approach toward China, has put a strain on diplomatic ties. Selling off U.S. bonds isn't just about finances. It's a calculated move to hedge against rising regional tensions. And Japan isn't alone. Other nations are also rethinking their financial strategies. Saudi Arabia's move toward China and the Yuan. Saudi Arabia's ties with the U.S. have long been built on oil and the petrodollar system. For decades, Riyadh priced its oil exclusively in dollars, cementing the greenback's status as the world's reserve currency. But now, that foundation is showing cracks. In 2023, Saudi Arabia struck a series of major trade and energy deals with China, and reports suggest Riyadh is weighing the idea of accepting Yuan for oil sales, a direct challenge to the petrodollar system. So what's behind the shift? Politics play a big role. Tensions between Washington and Riyadh have been building for years. The Trump administration's criticism of Saudi Arabia's human rights record and clashes over OPEC plus production cuts put a strain on the alliance. Meanwhile, China offers a trade partnership without the political strings attached. If Saudi Arabia shifts to pricing oil in yuan, it could shake up global energy markets and chip away at the dollar's dominance as the world's trading currency. The petrodollar system has long been a pillar of U.S. financial power. If it crumbles, the dollar's global influence could take a serious hit. And Saudi Arabia isn't the only one looking for financial alternatives beyond the greenback. The growing shift to alternative reserves, gold, yuan, and crypto. For decades, the US dollar reigned supreme as the world's reserve currency. But that grip is starting to loosen. Central banks worldwide are stockpiling gold at record levels. According to the latest IMF data, global gold reserves hit an all-time high as of January 2025. In 2023, the People's Bank of China added over 100 tons of gold to its reserves, a clear signal that Beijing is bracing for a future where the dollar isn't king. Russia and India have followed suit, ramping up their gold holdings and reinforcing this global shift. At the same time, cryptocurrencies and digital currencies are going mainstream. El Salvador has already embraced Bitcoin as legal tender, and many other nations are testing central bank digital currencies, CBDCs. The rise of crypto and alternative currencies signals a growing push to break free from the political and financial risks tied to the US dollar. If this trend keeps gaining momentum, the dollar's grip as the world's reserve currency could slowly slip away, reshaping the global financial system along the way. And ironically, the very institution meant to stabilize the U.S. economy, the Federal Reserve, is speeding up this shift. Before we dive in further, do us a favor. Hit that like button and subscribe. It helps us reach more viewers like you who are keeping a close eye on global finance. Now let's draw some new lines and map out our next point. The Federal Reserve's high-stakes move. Rising rates, rising risks. The U.S. Federal Reserve's aggressive rate hikes have put the global financial system in a tight spot. On one hand, higher rates make U.S. bonds more attractive by offering better returns. On the other, they've sparked a massive sell-off of existing bonds. It's simple market mechanics. When interest rates rise, bond prices drop. But the sheer scale of recent hikes has amplified this effect. Now, countries holding billions in U.S. bonds are stuck with a tough choice. Hold on to assets that keep losing value or cut their losses and reinvest elsewhere? What's even more alarming is the skyrocketing cost of servicing America's $35 trillion national debt. Higher interest rates mean bigger debt payments, tightening the squeeze on the U.S. budget. If foreign bondholders keep dumping treasuries, Washington could be staring down a fiscal crisis, where rising debt payments eat into government spending, fueling both political and economic instability. Even America's closest allies are quietly backing away. Just look at the UK's post-Brexit strategy. It's all about reducing exposure to US debt. The UK's financial pivot after Brexit. The United Kingdom has long been one of America's closest financial and political allies, but even London is reworking its playbook. Since Brexit, the UK has been pushing for greater financial independence and a more diversified reserve strategy. And a key part of that shift? Cutting back on reliance on US bonds. London has been recalibrating its trade priorities, leaning more toward the European Union and Asia, especially China. Brexit pushed the UK to rethink its economic trajectory, and part of that shift includes strengthening its domestic financial markets while scaling back reliance on US bonds. British policymakers call it strategic diversification, but the bigger picture tells a different story. With Washington's political gridlock creating uncertainty, this move looks less like a choice and more like a necessary adjustment. Washington's political turmoil, a rising economic risk. America's political dysfunction isn't just a domestic issue anymore, it's a global red flag. Repeated debt ceiling standoffs, government shutdown threats, and relentless partisan gridlock have eroded confidence in Washington's ability to lead financially. When Fitch downgraded the U.S. credit rating in 2023, the message was clear. Political instability in America is now a serious financial risk. For decades, U.S. bonds were seen as the safest investment on the planet, but now nations that once relied on them as a rock-solid asset are starting to have doubts. Political dysfunction has always been a background concern, but the deepening divisions and gridlock in Washington are forcing even America's closest allies to look for alternatives. And the biggest challenge to the dollar isn't just coming from within, it's being driven by two major geopolitical players, China and Russia. China and Russia's push to undermine dollar dominance. China and Russia aren't just competitors. They're on a mission to weaken the dollar's global grip. China has been pushing a Yuan-based oil market and signing trade deals that sidestep the dollar altogether. At the heart of this strategy is the Belt and Road Initiative, BRI, a massive project designed to reshape global trade and finance without relying on the greenback. Russia is playing the same game. By selling oil and gas in non-dollar currencies, mainly to China and India, it's not only propping up the ruble, but also deepening economic ties with key global markets. Meanwhile, the expansion of BRICS, Brazil, Russia, India, China, and South Africa, is adding even more momentum to the shift toward a multi-currency financial system. Final thought, is the dollar's reign coming to an end? The coordinated sell-off of U.S. bonds by 16 allied nations isn't just a routine financial move, it's a clear sign of a larger geopolitical shift. The dollar's dominance isn't vanishing overnight, but the cracks in its foundation are getting harder to ignore. As more countries diversify their reserves and cut back on dollar dependence, America's grip on global financial markets weakens. So, what comes next? Can the U.S. pivot and reclaim its financial leadership? Or are we watching the early stages of a lasting decline for the dollar? Let us know your thoughts in the comments. And don't forget to like and subscribe to Globe Lines for more insights on the shifting global financial landscape. The world's financial order is evolving fast. Stay ahead of the curve with us. Thanks for watching, and we'll see you in the next one.